Yeah,
live in
we're
a little
live.
bit.
We're live.
Okay,
So if you go to a
awesome.
screen share.
Let me just share with you guys what I got here, and we can kind of get right into it. Let me know
So tell me,
if you.
Alex, your handles at Twitter at Ether Analytics, and now it's at HFT. Uh,
No, that's actually my business partner, Steve Hammer. I'm helping
oh,
him with some of his things at his company, HFT Alert. He has some very,
okay.
very unique software that can look at the breadth of the market in a completely different way than it's been done before. So I've
Yeah.
been, and he's a fellow Santa Barbarian, so that's why we kind of
Oh,
connected. We're
okay.
a small
Okay.
town here, so a few traders. Feel free to follow Steve. He's always got some really interesting insights to different, stock and indice, movements. And we could kind of dive right into that right now. I was going to show you guys, one of the things we monitor is the breadth of the market.
Yeah.
And I know there's a lot going on in this chart, but in this yellow line, this kind of jagged yellow line I'm showing you here, this basically indicates that the market has been rising with less and less participation
Right.
from the shares internally. So the old adage, Granville says that breath leaves early and comes late. It leaves early at the
Right.
tops and typically can come back into the market late after the market's already bottomed. So these are always interesting kind of telltale canary in the coal mine signs, but they're not really, triggers. So we're really kind of looking for a place to step in here and maybe play the stocks from the to the short side. This rally has been tremendous, so it's been test of my bravery and courage to try to put my
Relentless.
relentless.
Yeah. So with before the rally started and we were trading under 1900, I was looking for 2050. Of course, it exceeded my expectations. I mean, we came very close to new highs for the move. So perhaps all we can look for out of any potential move to the downside would be a retrace of this recent move.
Yeah, I agree. I don't think we're going to go into a another prolonged down bearish move. Personally, I think I'm kind of more forecasting a sideways, maybe kind of choppy down move. Maybe half the distance, if that. We're starting to get some signals that this could be like an extension. We're starting to get them on the Nasdaq. This was very easy to kind of understand because with earnings and tech basically being so hot right here, a lot of those stocks having big giant gaps up and just large beats on their earnings, it makes sense that it would push the index to sort of an extreme level. What happens with these type of signals is if you get them in select indices and not in all of them, like when we had the bottoms here back in August, it's a little
Hmm.
bit harder to put faith in a reversal here. So, again, we've been kind of monitoring this zone in the Nasdaq and the ES, and looking for ways to maybe not necessarily short the indices, but maybe some select stocks that I think are just a little overblown that might have a little bit more juice to the downside if we get some of that. So that's
Okay.
that's kind of what I've been focusing on.
You
Um,
made a real good call last time you were long gold, and we had that huge move. You were also bullish oil. We had that huge move in the shares. You were long shares.
Yeah,
Um,
oil in the shares has been doing really nice. I've been overweighted in Exxon and Chevron, kind of the majors, just because I think those are going to dig their way out before oil really does. So that's been kind of a nice play. Natural gas, I am so scared to trade the Widowmaker because it's just never really been a good trade for me personally. My personality doesn't like the volatility of that market, but we did see some interesting signals here that I can kind of bring up, and you guys can take them for what they're worth. When we look at kind of trade setups from our point of view, we want to make sure that there's confluence across many, many time frames. And the reason we want to do that is because when all market participants have jumped into the market one way, those are the really extreme moments or setups in a market where you can expect a high probability, snapback or kind of movement into your forecast. So natural gas had what we call weekly extension, and the way we view this is every participant from the swing trader to the position trader, all the way down to the intraday day trader to the algos, has basically puked this market. So we're expecting, again for natural gas, not necessarily maybe a big rally, but this could be the early stages of the bottom, kind of like we saw with gold, earlier this year, and a couple of those big
Okay,
down moves.
I'd probably a little bit more interest in gold. You had a gold chart up there. When I looked
Yeah,
at the
so I remember the
weekly,
last time we talked, right? We were looking at these potential harmonic patterns. We were bumping up right against this butterfly, and there you go, the power of harmonics right in front of your eyes. So, this has definitely been a nice little trade. I actually wasn't playing it too aggressive to the short side. I was just kind of using it more of a hedge, because what we really spoke to was the dollar's potential for kind of a rally into this butterfly point, and we're getting close. This 100 level here is pretty key for kind of my prospects of the Dixie going forward. I don't personally like to short into such a strong kind of catalyst move here, but if this starts to trace out something that seems like it could reverse the downside, I kind of like that. I'm sort of contrarian here, because everybody's thinking rates, 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 right? Dollar rally.
yeah.
But I'm paid to take the other side of the majority, and so that's what we're kind of getting a little contrarian here with the Dixie. So just
Okay,
kind of
so
wanted to
right up
point that
around the
out.
par level.
Yeah, right around par is kind of where we're looking at. We're going to be monitoring it for extension signals and trying to figure out, maybe there's some good plays here that are not necessarily directional. Maybe there's kind of some neutral plays that we can kind of put on, maybe condors, or just kind of, sell volatility or something like that. That could kind of work for us. So that's what I've
Okay.
been really kind of
So
looking at.
does gold look like we're going to take out that 1070 low?
Yeah, I mean, gold is just such a monster market right now, and as your handle definitely points to, they run the stops in this thing all the time. They ran them up here, they ran them down here, so I have no doubt it's probably just going to tick through this August low. You might see a puke, but I think you're sort of at the end of a move, so it's just kind of not a high probability setup for me. And
Okay.
at
Well,
this point,
I'd like to refresh
yeah,
your memory. Last time we talked, I said a bullish signal to me would be gold taking out that low,
right, right,
and the shares not.
right,
And that
exactly.
looks like that might be setting up here.
Absolutely. The strength in the miners it's taken a long time to actually come to fruition, but you can start to see, some of the select names, bigger guys, survive, kind of this prolonged bear market in gold. So, that could be the play when you get the kind of flush out, and you finally flush out all the weak hands, then that's when you can get a potential reversal. So, I'm really waiting for the dollar to have a very clear sign of a downside reversal before I feel comfortable getting long gold in any significant
Okay.
way. But I'm on the same page with you for sure. There's some definitely interesting inflection
Do you have
points
any
here that
harmonics
we
in the
have to
dollar
focus
that
on.
could take it up towards 102.50 to 104, which is a lot of counts people had off of conventional technical analysis and
Yeah, if we blow through the 100, we could definitely get up towards 102. That's kind of the higher end
okay.
of the range we're looking at. Um, my ideal level's here at 100, but with this strength, I have no doubt that it's definitely possible you could push up in there. Um, Especially from the long-term perspective, you would think that they would just take out the capitulation high from last March. That would be just an easy kind of way to look at it. Is
Right.
how are they going to kind of push people to drive orders, to drive order flow. So I think that there'd be a lot of stops sitting right here at this 105, a lot of retail stops. And so I
Okay.
wouldn't, be surprised if we push up through there for sure.
Okay. What else?
The
Anything
the
else
the
in
the
the
last kind of
commodity?
major, yeah, the last kind of major market that's been my main focus, because the last time we talked, I didn't really have a lot of stuff on. I didn't have a lot of conviction really of any kind of trade, to where I was going to really push a lot of capital towards. But the bonds started to get really interesting here in the last week. You guys can see these little blue bars. These are sort of the opposite of extension zones. They're compressions. And when these start to pop up on our screens, they indicate that a new trend, a new very strong or potential very strong trend is about to happen. So we're breaking out of these zones, and so we are establishing short positions in the long bond and the TY, and we're definitely looking for places to add on pullback. So if we get any rallies here in the bonds and the TY, we're definitely going to try to play those as short side. We're also
You have
looking to
any
play
like 10? You have any like
sort of the
10-year
curve,
yield?
yeah.
10-year yield target like 3%, some or in that range?
Maybe. I mean, I'm more playing it just from pure price action. I think that stuff does dictate longer term, but
Yeah.
we're trying to just precision focus here and try to get some key areas to step in, get into this new trend. So those are kind of my main markets here that I'm looking at. One market I think a lot of people don't really talk about that much and don't necessarily maybe trade all that much is sugar. And I think sugar had kind of a really interesting sort of capitulation earlier last week. You could see, I don't have my COT index data, but there was a very large shift in the commitment of traders report. And I
Mhm.
don't know if any of your followers like look at the Wilco index or the COT index, but what that measures is basically how the commercials as a group are positioned in a market or have recently positioned in a market versus how they did, maybe 3 years ago or 3 months ago or whatever look back you want to normalize to. So we think this was sort of an extreme move here in the sugar, and with the dollar up, it's just going to have compression, or compression on most of the commodity space. So I think this is kind of an interesting place to try to play a little sugar short.
So the dollar is really the linchpin for
It's it,
everything.
king dollar, king dollar.
Yeah.
I mean,
Yeah.
I got trained in trading. My first job being trading rates. So the dollar and rates to me drive most of the markets, not the other way around. So that's we take our key kind of forecast positions from those two markets.
Any harmonics active in Euro USD that we could see? I mean, the
Euro,
Dixie is pretty much the mirror image. So if we're about 80 points away from a butterfly completing, we should probably be close to something completing in Euro, right?
yeah, the Euro crosses that I thought were interesting were definitely the Euro USD. We're a little premature for a harmonic here, but down at the 106, level, you could see kind of a major turning point. I don't really like this trade personally. I just think the fundamentals behind it just don't really support a really high confidence trade. I'm actually looking sort of in some more exotic pairs. I kind of like this Euro Turkey capitulation.
Wow,
Some
the
of these
lira.
more yeah, some of these more exotic pairs can sometimes get some better tradable moves. You could see last time we had these top extension clusters, there was a really nice setup for a trade, and so now we're kind of on the alert for the opposite, where we're starting to get these bottom extension clusters, and that's kind of trade we really look for. We look for like extremes in all the time frames, and then we like to kind of not really play all our cards in the more popular markets. I kind of like to focus some of these like marginalized pairs or marginalized trades. So this is kind of an
Okay.
interesting idea.
Yeah, what are spreads like? Probably wide.
They're definitely not as tight as the majors, but one of the ways we play this just for kind of a more simple way is just through swaps, and it's just easier, kind of more binary trade. We don't have to worry about execution as much, and it just feels better in our kind of in our book. So that's kind of some of the ways we play these, less common pairs.
So
The
we
CAD
wrap it.
JPY
Go ahead.
had an
Go ahead.
interesting compression too. I mean, this is just not that big of a focus, but for people that are kind of looking for, new pairs to focus on and might not have any good ideas, this had a compression 5 bars ago, so it's still definitely in play. And again, these compressions, we don't really have a view from the signal where it's going to go, but we just know that it's going to start a new trend. So this is definitely a place to kind of keep your eye on if you're looking for an idea. To wrap it up, what do you think? What's been going on in your world? I've been
Well, there's a debate as to whether or not crude has bottomed or not, Alex. We have pretty good two-sided action. I'm wondering where your head's at, if you still believe that the crude
Yeah, I
oil
mean
bottom is in.
the two major things that are interesting to crude is the longer term stuff I see in price action very much dictates a possible bottom here, a possible bottom. That's just really focusing on price. But the fundamentals, the supply issues, the major glut, maybe some of the political things going on, I'm not quite, sure. And maybe this is why it's a good time to try to play along, is just because it's not quite clear yet and we could be at an inflection point. But I just think it's so hard to rally out of the basement when there's, more supply on the planet than there's ever been in the last 10 years. So
Good point.
it's kind of hard to play. But that's why I'm playing it through the shares, because the stock market's going up, and the shares are going to get a little boost from just the overall indices pulling them. And then, the value managers have been underperforming this year, pretty hard after the August, so they're definitely, you kind of got to think they would definitely overweight some things that are, big names that are just kind of cheap, and they can kind of justify that in their portfolio. So that's kind of why we
How
put those
about
shares.
some of the beaten up sectors, and even though oil shares have recovered, aren't we now entering the time frame of tax loss selling, where people are going to start to liquidate their losers for tax
Yeah,
purposes?
you're gonna get a lot of movement here. That, summertime is usually boring for me, the end of summer, and I start to lick my chops kind of going into the end of the year to position myself. The another play on the rates here, and I tweeted this a couple weeks ago, was the XLU ETF. So it's pretty common knowledge when rates rise or expected to rise, that this sector just gets completely obliterated, right? I mean, that's kind of one of the easier academic plays that's on the table. So we had a nice bat here, played this through kind of hedging our other long stock positions. So we were like short the XLU, and then we were long, some of the energies. So this was kind of a really good play. I still think this has legs to it if come December, some other numbers come out, or maybe, there's some more data leaks about the rate raise. But that's really going to be the major inflection point that at least the people I talk to are all waiting for. They're just sitting around waiting and waiting and waiting, and some of them don't even know what they're going to do when they raise rates. They're just waiting till they raise rates to do anything. So that's kind of my 2 cents there.
Well, maybe by the time we get there, most of it's in the market.
Right. Who knows?
The dollar going up on the perception of higher rates, bonds under pressure because of that, and equities acting
I
like
mean,
everything's
did you hear
okay.
that George Soros took back his $500 million investment with PIMCO, Bill Gross? So, don't listen to what they do, watch what they do, and that's definitely something that has kind of rung pretty clear with me. Is the big boys might be, seeing know what's going to happen in the future here.
What would that imply? A rate that this number today cemented a Fed increase in December, and that's why
Yeah, it
Soros is
just seems
pulling
like every
bond
day that
money.
goes by, it seems like they're getting more and more confident of a raise. I just think I always remember, well, I forget who said it. It was maybe like 3 weeks or maybe a month ago. Somebody at the Fed was like, "It's not impossible for rates to remain negative forever." I just, that stuff is just so comical to me because
Yeah,
it's definitely not there.
they need to be quiet for a while. Maybe go
Right,
back to the way the Fed used to be. Their transparency has led to more confusion than their lack of transparency.
right, right.
So I want to thank you, Alex. If I don't talk to you, I hope you have a great holiday season. Happy Thanksgiving. Good hunting in the markets, and thank you again, my trading warrior brother, for hanging out with us today
Yeah,
for
likewise, my
20
friend.
minutes.
Feel free to follow me. Anybody who hasn't, added me on Twitter, and I'm always, available for questions or whatnot if you guys have any kind of just general feedback. So I'll talk to you soon, and have a good holiday.